Hello everyone. So I'm going to have a review of previous week price action. In this video, we are going to go through each day and have a comprehensive review from the higher time frame. So we're going to look at the monthly, weekly, daily, and then we're going to see each day how price has moved. And inside each day, we can also look inside the 4 hour, 1 hour, 15 minutes, and then I'm going to focus on the PM session. And in the PM session, I want us to see some setups that we can use using SD concepts. And one personal reflection that I had this week was I've been struggling a bit with risk management and over trading, to say so. So this seems to be a bit blocking my development as I go forward. So even though I made money this week and it was a positive week, I was not happy with my overtrading behavior. And in this step in my journey, so I feel like sharing with you because this channel is also about discussing the struggles that I'm facing as a trader. And one thing that I've been thinking of is to frame the setups more, to frame the risks. So I've chosen some setups that I have identified during the week through my journal analysis. And I want us to go through the setups and frame the stop loss, frame the take target, and sort of train with that. And I'm going to take a risk of around, so let's say our account size is like um, $7,500 or $10,000, somewhere in that range. And we can take a risk of between 0.5 and 1% risk. So we're gonna see how we can frame the setups in the PM session using that risk. But first, let's look through the analysis. So as I shared at the beginning of the week, looking at the seasonal tendency, this was likely to be a bullish week. And the week before that was the Easter week. So Monday, we didn't expect much to happen during the trading. And if we look at the calendar, we see that we had some news on Wednesday, and then the more important news was on Thursday at 8:30. So we expect, like ICT teaches, we expect the better moves to happen after the news. They usually set up the traps before. And as we see, Wednesday, in my opinion, was a difficult trading session. Very much high resistance, price was holding the range. And then we see how on Thursday price has moved really well. And then we had a little bit bump on Friday, even though Friday was a bit of a seek and destroy in the AM session. So usually, like when you make money during the week, it's better to not trade on Friday. But otherwise, on Friday there tends to be what is called TGIF, so you can check on ICT channel TGIF. Thank God it's Friday. There is a model about that as well. And we saw this model happening also on this Friday after the AM session. But Thursday was the nicest day to trade. And even if we look in the calendar, we can anticipate that. Yeah, so let's go forward and look through the analysis. So what I usually do is I have a template for each day of the week. So from Monday to Friday, I usually have my templates. And then in the PM session, I like to have a template as well where I have the first value gap. And I have also templates for new week opening gaps. So I'm going to share that in a minute. So this will be my new week opening gap template. And I usually keep like the last 5 new week opening gaps on Sunday. So this is 5 weeks in the past and then 5 days. So you can have more, but for starters, this is a good one. And I also have this opening range. So the close at 4 p.m. the previous day and the 9:30 opening. So you can toggle that here. So this is another template. I usually just peek through this because I know For example, this is one of my favorites because it tends to sort of draw price. I'm gonna make this disappear, it's distracting. So it tends to draw price to these levels, and as we saw, like really nice move on Thursday, which I'm gonna go through. But usually I focus on this main template for each day. So I'm gonna start with Monday, and then we go through the other ones. And when we want to see the session specific, I go into the PM session. So if we look, this was Monday. So the week has opened. The week has opened on Sunday. This was Sunday open, and then this was Monday's price action. And this is the weekly template as well. So we measure the quadrants of the previous week. And then we also measure the quadrants of the previous month. And here we're going to display it on the 4 hours. This is also called the Trinity in ICT concept. So this we're going to show in the 4 hours. So here we can see these levels over here. And then for the 1 hour, we are going to show the weekly levels. So these are these levels. So yeah, so Monday price has opened. It's been going down. It almost touched the daily order block here, but not quite. It was into the wicks, into the wick of this. So the whole this area is like a bullish area. I would have loved it to touch here and then boom higher. I was expecting for that move to happen maybe on Tuesday, but it didn't offer it to us. So this can also indicate that price is very bullish, so it didn't even touch it, so it found some support before. If we look on the 4 hour, so this was the new week opening gap on Sunday. So price has opened, it's gone into a discount. So here we see we have a mitigation block on 4 hours. So this is almost like a bullish block, a bullish breaker. But bullish breaker is usually low, high, lower, low, while mitigation block is low, high, higher, low. So it's not a lower low. So bullish block is a bullish breaker. I hope I said that right. So bullish breaker is low, high, lower, low. And mitigation and block is lower, low, high, higher, low. And then we always take the upmost candle with the body. So this would be this area. So this should show, price should show some sensitivity in this area. And we see how price comes down. It doesn't close it. And then it goes higher. And here we have daily order block. So we see how it didn't touch it here. I usually like to keep my charts clean. I usually like to show the levels only like on that chart. So if I'm like on the 4 hour, and I notice that I see it here, or if I'm on the 1 hour, on the 1 day. But some levels I like to show on all charts. So yeah, so it depends on how important those levels are. But here you can see like the fair value gap, how I like to show it only here. Otherwise it would be too much on the chart. So yeah, so on the 4 hour, this was the move on Sunday. So it was basically the Judah of the week. So it went into the other direction than the bias. And yeah, so we just came down. Here it stopped over here inside the mitigation block, and this was the close at 6 p.m. If we look on the 1 hour chart, so these are the levels again from the previous week. So notice how price has opened at 6 p.m. on Sunday, and then it comes down, and here at 7. Notice how price comes below the low of the previous week. It will be this one. And this is a nice setup over here in the morning session. So we make this order block. So we take the tail of this last bullish candle before the move down. And notice how this candle at 7 a.m. broke below the low of the previous week and below the 1 hour consequent encroachment of the fair value gap from here, the 1 p.m. from 9 April. And here it was a nice entry. We had inside this order block. Price comes up during the 9:30 opening, and then it just hammers down. And it goes all the way down here, stopping before the touching the order block. And I mentioned here how I would have liked to see it touch over here. And then on the 3 p.m., so in the PM session, it makes this big candle up. And then at 6 p.m., we open it, and notice how price stays above the consequent encroachment into the upper quadrant. So see how perfect that is. So you can see over here, the low is at 63.75. And then it's just one handle above this. And then it goes higher. So if we look on the 15 minutes, we can actually find the mystery of why price didn't touch the order block. So we see here, so here I have this level also shown. And then if we look to the left of it, we see a 15-minute fair value gap. So it will be this fair value gap over here from 13.15 on 9 of April. And we see the low of it. And if we go all the way down on Monday, we see how price respects that. And see how perfectly the bodies are respecting it over here at 3 p.m. And then we have this 15 minutes CB. And here it could have been like a nice scalp in the PM session. And then here we have another 15-minute CB, quite small one at 11:15. And we see how price goes above that as well at 4 p.m. And it takes this buy-side liquidity over here, but it leaves this one intact. So if we look on our, so now I'm on the PM session template. I'm gonna remove it from here. So yeah, so these were like some 15-minute swing highs that I was pointing to. And here is the actual session that happened. So we open, so here we have the PM range high, 75, 50%, 25%, and the low between 1:30 to 2 p.m. And then the first fair value gap, we can see it over here. So 131. So, and here we can see some setup. So over here we have a nice setup when so price has been taking the buy side liquidity and coming inside this order block, and then price came lower. But before that, so I see this setup over here. So we have this inversion fair value gap with 1346. So at 1:30 we open over here, and then we come down, and price is starting to go up here. And here we have a sign. We have a 1445 fair value gap. And here you can frame a trade setup. So since we have this fair value gap, the entry can be here. The stop loss has to be below this energy bar. So over here, and you would target high, this swing high, and then you target this swing high. So let's see how this one would look on a paper trading micro account. So we have the 1416 fair value gap. So if we take our, I'm going to show it over here. So I'm going to remove this for now. So over here. It's not super clean price action. And that's what is expected because it's the first day after holiday and we see these overlapping candles. So whenever it's like overlapping candles, I don't expect the session to be clean. So it's better actually to not trade it. So in a perfect scenario, we would not have liked to see these wicks coming here. We would have preferred to see it in the upper half. But still, you can see how the concepts are respected. So if the stop loss is below the energy bar, like ICT is suggesting, we see how price almost comes down to touch it just by a tick, but it doesn't. Because this is algorithmic price action. So, and then we target the swing high, and then we would target this swing high. So if we take a trade over here, it will be like this. We would take a trade on this area at the low, so that will be 17,748 point, 17,738.25. And usually I just suggest this to go like one tick above it to make sure we get filled. Stop loss is below the low of this candle, 17,725.75. And then our take profit could be here, 17,754. Or we can take our trade over here, so that will be like $31. Or if we go for here, 76.25. That will be $75. So we're risking $25 to get this one. So let's assume that we take this trade. So I'm gonna go on the replay mode. The fair value gap has formed, and now we put our trade over here. Yeah, this disappears, so I have to wait for it to come over here. So here, now I would enter the trade, and my stop loss would be over here. And then my take profit would be over here. So this is a very good risk to reward. It actually came a little bit lower, but unfortunately I can't control it. And then we see, so it takes, so we would enter our position at 14.19. And then let's see how long it takes for it to move. So if we take here, and let's see how long it will take for it. So we see how price came a bit against us for like, we're gonna calculate how much price went against us. So we entered here and price has went against us $10.75. So that's $22. And if we take commission cost, which is like $1.28, so you go around $23 price has been against us, because we would have entered a bit higher, not like here. So we write that down. $23 hit. Stop loss was 38 till 25, 13 handles by 2, so $26 plus commission cost, $28 stop loss. Oh, sorry, $26 stop loss. I don't need to write commission. And then let's see. So here, it actually goes a bit more than that. I'm sorry. So price goes $13. So stop loss is like just one tick below it, as I said. So hit is $26. stop loss is probably $27 something there, because we see it doesn't touch it below this energy bar. We see this small area. So this is enough to protect you, and we see how the concepts are working. And this could be our first partial. So here we would be in the trade for 10 minutes. And this would be our second partial. So here would be in the trade for 13 minutes. And we would have made around $70. Or let's see exactly. So 738 till 54, 16 handles. And then 738 till 775. That's like 32 plus 5, 37 handles. I'll just write it in handles, and you can just double it for $2. So we take heat $26. Our stop loss would be around $27. And then we partial 1 and partial 2. So this would be a trade idea. So I'm going to screenshot that. So this was that. Then price takes the high turtle soup, and then it reverses over here. Here we have another trade where we see how we get this market structure shift. So swing low. This is also the fair value gap over here. And then we can aim for price to go lower here. And then we have this big inversion fair value gap. Price comes lower. Here we have the same inversion fair value gap. And here a bearish breaker. So this is the high, low, higher, high. And we can enter in this area of the breaker, or we could have entered here as well. So this is a nice trade. Like we see the first fair value gap. So we have the turtle soup, and then we have the first fair value gap. We break below it, we come up, touch it, and then we go down. So let's look into this trade. And our stop loss would be above the mean threshold. So let's exit it for now. And then I'm going to show how I would have framed this trade. But this is the turtle soup. You see how here it looks a little bit different, like it makes this gap. Yeah, it can be a little bit different, but we always follow the NQ. And then we trade on the micro because it's less dollars per point. So we have this inversion fair value gap. So our entry would be like, so we see this, and then we get this fair value gap. So our entry would be in this fair value gap, 757. So this will be our entry over here. This would be our entry, and our stop loss would be above the mean threshold over here. And then we would target this area over here, but we see how it didn't come below it, it just left relative equal lows. And before that, we have this area over here. This is a swing low. So this could be a target. And then we also have this 15 minutes, sorry, this 1 minute fair value gap. So then we will see how price reacts here, if it wants to go lower or not. And then this would be our second target. But in this case, it would have stopped us in profits if we would have adjusted our stop loss. So this would be target 2. Does actually come very little to take it. So let's see how we could have taken this setup. So we see the turtle soup here. And here we see the fair value gap forming after it showed this this week. Yeah, so now it's going to tap into that. So this would be the move. And then because we see this rejection, we decided to enter here. Our stop loss would go above the mean threshold of the order block, so the 50% level. And we can target this area or this area. I'll keep it like this for now. So this area is, so we enter here. We're risking $14. Target is 30 handles. And let's see how much heat we're going to accumulate and how long it takes. So we see that heat we accumulated, sorry, 5 handles. And then it took from that time when we entered 1439. So it took 5 minutes. So this would have been the trade. And then we see how it pans out afterwards as well. Yeah, so I can leave this for now. And then price comes here. We have this inversion fair value gap and bearish breaker. This is also happening around the macro time. So here we see an entry we could have. So we see the resistance here, price stays below, and then we get the 1450 and see how price is in this liquidity void. And then here can also be an entry from the liquidity void down. But then we get the market structure shift. And then afterwards we get this huge candle up. And then we see how so this was the 15 minutes busy, if you remember. This one over here, which respected and then goes up. And here we had this 15-minute fair value gap. We're here, this area. And we see how price comes up to this area over here. So, and here was, this was the target. And we we want to see this area stay open because it acts as a breakaway gap. And here you can also see how it comes into the inversion fair value gap from 1416. And this bearish breaker, when it doesn't find resistance in it, and see how it comes up above it, it touches perfectly here at the 1503. And this is also into a discount because it's the 50% of the PM range. So this is another entry during the 250 to 310 macro. And then we aim for higher prices. It comes above here at 1506, here another entry, touching below the PM open. So here is some framing of that. And then price goes higher. So I'm thinking maybe I will make another video where I actually will do this trade ideas. As you see, I outlined them here because it can take quite much time in the same video. So I will go through the analysis and then maybe make another video to show this once. But here we can see again the 15-minute, here's a 15-minute order block over here, and price just goes through it. And here we had the inversion fair value gap. And during the set time, so notice how here at 47, the sell stops get taken. We have this little liquidity void. And here, this week goes down, but the body stays above the inversion fair value gap, which shows that the price wants to go higher. And here we can enter again. So this happens around this. Notice the tail, consequent encroachment, see the perfection here. Here you can enter, and here we had the 15-minute fair value gap, this one. And then we have this levels of relative equal highs. So price comes up to this one and makes the high of the day. So this was Monday session. Now let's see Tuesday session. So Tuesday price action. Tuesday we see how price, so price has come below the month of April on Monday, and then Tuesday notice how price is finding support and going above that. Here let's see the daily first. So this was Tuesday. Price, the low of the day, it's happening during London, and it's at the 0.75 tail. So notice 860.25. So here is like 863.75. So it's in that area. Find support here. Monday it already took the monthly April low, and then price goes higher, and the high of the day happens at the daily consequent encroachment of the inversion fair value gap from 1404. So this is the midpoint over here, and notice how price just goes a little bit above it but doesn't touch the upper quadrant. And this is the high of the day, and we close around here. So we get a move lower into the close. On the 4-hour, it would be this area. And we see how price finds support during London at the daily consequent encroachment. So if I put the daily over here instead, it will be this area, 704. So I think this is the 4-hour actually, or it's the 4-hour, I'm sorry. Okay, so see the price can change a little bit if you look with the toggle. So we have to take both into account. So this is with the set. So see the set is like this. Otherwise, if we take it here, it will be a bit lower. So this is how this was calculated. We see how it matches this level, 995.25, which is the same one. So yeah, so both this have to be taken into account. And then price finds support here during London session. So then we see how price finds support in London and goes above. Here it stops at 6 a.m. during the 75 quadrant of the tail. And then it goes as high as this 4-hour CB consequent encroachment, and then it rejects lower. So this was the high of the day. And that also was in the same area with this daily inversion fair value gap. So we can see it over here. So this one. And then we come lower. And on the 1 hour, we see this this BC over here. So the BC happens at 7 p.m. And then here I find support 11 p.m. Then here I find support at the daily week consequent encroachment. Here is a bullish breaker, so low, high, lower, low. So I annotated the week of that, and then we have the mean threshold, and this coincides with this fair value gap as well at 2 a.m. And then see how price finds support at that, and then just goes higher all the way. So till lunchtime. And this, we see how it takes also the Tuesday. No, it doesn't take it, sorry, it leaves it untouched. This relative equal highs. So here price is finding some resistance. So we're between the consequent encroachment and 75% level. And then it just consolidates around. So we are at it finds support at this upper quadrant. And then notice how this is the 0.25 of the previous week. So we're staying in this area over here. And on the 15 minutes, this was the 1 hour. So I show it just on that, and this would be the 15 minutes. So do we have a volume? Yeah, we have this volume imbalance, so we have to take that as well. And see how price stays here. It forms a bullish breaker. Notice how it takes turtle soup and in the bullish breaker. And then 7.45, it goes up. We have another bullish breaker on 5 minutes. Find support at 10 a.m. And then at 1 p.m. we have this CB, so market structure shift, after we rejected at the 4 hour. So here we had this rejection, and on the 1 hour as well. So this is a short, and we can target this area, and notice how it perfectly comes to hit the daily tail CA. So if we look here, you'll notice over here, this is the daily tail CA. Probably have to look again. Yes, so see on the set. And then it comes one more time here at 3:30, 17:04. So it will be this one over here. And we see how it touches it here and then just bangs around over here. And if we look on the 1 minute on our PM session, so we see the 152. So we have, this is our first fair value gap. This is our 130 open. PM range high 75.05, 25, and the low. And the low coincides with the AM range 75. And then this is, we are inside the midnight range of Monday. And notice how price goes up all the way here. And then we are in the 1450 macro. We are inside of a fair value gap, 15 minutes. And notice how price is also on this Thursday first presented fair value gap. So if we go, see this area at 389. So this was first day, 1330.31. So this little area, see how it comes all the way up to Tuesday. And then price is giving us the hint that it wants to go lower. And this is a really nice short over here. So it rejects, we make this breakaway gap, and here we have a fair value gap. It can tap into this one, but if it's really bearish, it might leave this one open. So we can have our entry here. It also synchronizes with this liquidity void. And this is also like a bearish breaker, maybe on seconds chart. Here another entry inversion fair value gap. And it goes all the way down over here. It doesn't take the low. And notice how this was Thursday's low. So if we look over here, we see how this was Thursday low over here, which it comes and take again. So it takes Thursday low. It has taken this liquidity. It has stopped this first fair value gap. And then here price finds support at the daily tail consequent encroachment like we saw here. What was it? Yeah. So this one. Over here to 42. And then it goes higher. And it makes this huge move high. And notice how it hits the, this is also the 1:30 p.m. open of previous Thursday over here. And then comes down and finds support at today's PM session high. So this was today's PM session high, just a little bit above it. And it doesn't touch it, but notice how we have this CB. So the fact that it leaves this area open, it's also another hint. Then it goes for these highs and comes into this fair value gap over here. So notice how it comes exactly at the consequent encroachment of it. And then this is the stop at 400. This is also Thursday close. So if I look on the daily, this is Thursday close over here. So this was the PM session delivery on Tuesday. Now let's see Wednesday. But this was Wednesday. We went really high up. So the high was above this daily volume imbalance. And Wednesday was a very difficult trading session, and we see how that happens also in this area, the volume imbalances. And it's also the day before the important news of the week, so there can be traps over there in that day. And then if we look on the 4-hour, so we see how Wednesday pretty much consolidated between this volume imbalance from second of 4. So we touch a bit above the consequent encroachment. And then so this is this monthly tail consequent encroachment over here. See also how bodies are staying in that area. Finding support, finding resistance. And then here as well, we have this busy. And this is already, sorry, this is already Thursday. So price just stays in this busy and this daily volume, this 4-hour volume imbalance. And if we look on the 1-hour, so we have this new day opening gap. It doesn't go below it, it just stays here. We have this 1-hour order block, and here we are in this new week opening gap from this week. 75 level, and we see this very back and forth price action. On the 15 minutes, we have this 15-minute fair value gap. This is a nice entry in London. We don't completely close, which shows us that it wants to go higher. And we go to the new week opening gap 75. And then we come all the way down. Here we had the 1-hour order block, which we touch here. And then we just go back and forth into the close. So very difficult to trade in this area. It's better when you see this type of environment to not trade. And then this is the first fair value gap. So when you see this like overlapping candles, you know the probability is not there. So the concepts are not likely to work as good. But here we have here we have the first fair value gap. Here at 230, this was a trade you could take. We have this big CB down. While we are in the first fair value gap of from the AM session. And then you could enter here. And then stop loss could be somewhere here. It's quite of a big stop loss. And then you aim for this low. But you see how much back and forth. 1432, 45, so 13 minutes. Or even half an hour to properly take the low. And then we come into this area. This is a bearish breaker. And then here it hits the 15-minute consequent encroachment over here. So this was what made price to go higher afterwards. Perfectly touches this. Make it a bit bigger. So notice this huge wick, 15 minutes. 330 we expect a reversal. So price is reversing over here. And it goes into this it goes into this 15 minutes fair value gap. So this was the trade after 330. That macro, then it comes down, and then notice how it does this move after 4 p.m. It's usually not advised to be in the charts after 4 p.m. But notice how this move could have very likely happened before 4 p.m. But it happened after. So they deferred. So there's a lot of manipulation in the price also. And notice how here price is inside this bullish breaker. So we had this 15-minute bullish breaker. You can see it on the 15-minute chart over here. So we extend that to the right and on the 1 minute. And here it finds support, and then it goes high to the first fair value gap, and it makes the high of the PM session into the close here. But it doesn't deliver to the relative weekly highs, which was something that I would have preferred. So that will likely happen later in the week, as we will see. So yeah, so this is the end of it. Now let's see for Thursday. So Thursday was actually the move of the week. So we see how we come down, we take the Wednesday low, and we stop perfectly at the 75 of the daily week CA, of the daily week from 17 April. Then we come higher. Also very important to mention, if we look at the new week opening gap template, notice how Wednesday, like, price was in a high resistance, consolidating between this new day opening gap, and we really wanted to see a move lower to touch this area, or to break higher above the new week opening gap to take this high. But we didn't see any of this, and the price was just hold inside this range. And if we look, this range is also like, see how price was in this midpoint. This is also known as event horizon, PDRA. See it here. So if we put it between this new week opening gap and this new day opening gap, it stops here. But then Thursday price, it's allowed to move again. And notice how it comes, it takes this low, it finds support in this area, which is above the 75%, and see how the bodies are respecting here, the high, and then it's allowed to move higher. And if we look on the daily, we see how the high of the day was taking this weekly high over here and stopping in this, just wicking above this volume imbalance on the weekly. This is from a few weeks before, from 31st of March. And this was a really nice move into the close over here. We're going to look at it soon. On the 4-hour, so as we shown, is that the daily tail 75. Sorry, week 75, this one over here. And then we're inside the new day opening gap in the upper quadrant. And also notice how it perfectly touches the 4-hour 25%. Takes this low and price just booms higher. And it stops, it takes the weekly high as we saw. And if we take the consequent encroachment of this tail, we see 416.75. And we see how price goes 1.25 ticks, handles above it. So that was like the high of the day. If we look on the 1-hour, we see how when price comes into this new day opening gap, it's also dropping into this bullish breaker on the 1-hour from Thursday. It's 3 a.m. actually. And then here we are also, this is very interesting, we are in a discount because we are just below the 50% of the previous week range. So this is actually the nicest setup of the week. And then it goes up, and it goes up all the way into this old bullish bearish breaker. And here it goes above it and comes one more time down on Friday at the high of the previous week. So this was the move on the 1-hour. 50 minutes chart, we have a very big AM session move. And usually when that's the case, the PM session is likely to not give us too much. It's a bit harder to trade, it's better to skip it. But as we see, there was also a very nice move into the close. So let's look about that. So this was the PM session. We have the first fair value gap. Here we come at there's a 15-minute volume imbalance at 1450. So we can see it over here. So this is a very relevant volume imbalance. So if we look at this one, 913.5 and 912.25, we see how this one is coming from here. So we see it over here from 9 April, 8 p.m. And then we see how here price rejects. So 325, what was this level? To see how this is the weekly volume imbalance at 1445, which we're touching it. So if we look on the 1 week, we see this area. So here we are at, and then we make this higher high, and then we reject lower. And then notice this 15 minutes volume imbalance. Here we have a bearish breaker. This could be a very nice entry over here. So you could enter between this low to this min threshold, and you could add your stop loss above the 1555 fair value gap. So you have this fair value gap, and then you have this consequent encroachment. So you can add it here. So in this area, you would add your stop loss, and then you would target this over here. And here we have some more liquidity. We don't reach into it, but this would be a nice target. So this liquidity and the first fair value gap, and here it will probably stop us in profit if we adjust our stop loss as it moves in our direction. And then 1530, we tap this order block over here. See how the bodies are respecting it. And then notice this is the 1:30 p.m. open over here, the first fair value gap, and price consolidates around and shows respect. Here we have the CB. Notice how it just wicks. It doesn't touch the 25 level of this fair value gap, or doesn't touch this consequent encroachment. The body stays in the upper half, and then price just moves higher. Here we have a bullish breaker, low, sorry, a mitigation block actually. No, a bullish breaker. So this is the low, high, lower, low. Bullish breaker here during the set. Price comes down. Before here it touches it and moves higher. It breaks above this bearish breaker, so it acts as an inversion level. So see how it reaches the low and then it inverts. And this was the trade I wanted to show. So here we had the weekly high, as we see, 386.75, as we see here in this volume imbalance. And then notice this 15-minute fair volume imbalance that we looked at before. So 904. So this one. This one. See how it touches it? 55, and then again at 1601. And then this is the catalyst for this huge move up to take the volume imbalance. And here I think it was the 4-hour tail that we hit perfectly, 16.75. It goes like 1-2 handles above that. And this was Thursday. And then Friday price action. So notice how Friday it comes above it. There's the new day opening gaps. It comes below it. Can remove that. That's the one I was showing before. And then it finds support at the new week opening gap 2 weeks before. And then at 1345, perfect touch of this consequent encroachment of Friday new day opening gap. And then it goes a bit higher. And we see how the high, this was really nice to observe. This was the high of Friday, and it coincides with the 25 quadrant of the previous month. And then we make the high of the day, of the week as well. And this is also between, midpoint between this and this one. So here we see touching the new week opening gap, then going higher. And here we see support at the week volume imbalance as well. And this is also a bearish breaker on the 1 hour, acting as an inversion level. Here we see the 1 hour bearish breaker. And then price goes higher. And here during lunch, we create this 15 minutes fair value gap, which comes down to touch it. And it goes and takes, this was the weekly high that we aim for on Thursday on the PM session, and then goes higher from here. It's also like a mitigation block, sort of. And here we see the move on 1 minute. So we have the first fair value gap. Here we are inside of, so first we come down, we reach the high of the previous day of Thursday. And then price comes up. We are in this bullish breaker, low, high, lower, low, mean threshold. Also notice how we are in the PM range, 50%. And then we go higher. We take this buy sell liquidity over here. And we take the 1:30 PM open. And then around here is the 0.25 level on the monthly. So this is how this week so far has been looking. And hope you found this analysis interesting, and that you can see how the PTs arrays are respected and how we see the seasonal tendency acting as usual this week. So the seasonal tendency are not always going to be acting exactly, but it does give us an indication if it's matching the PD arrays. So yeah, hope you have a good evening, and I will post another video with framing the setups and the risk management, and then we're going to look also on the analysis for the previous week. Have a good evening.